The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as you take a look at the grain markets, beans, bean oil in particular, the upside leaders, pretty solid day on Thursday across the board in grains. A little more mixed in the livestock. We're closing in on a 3-day holiday weekend coming up here with Labor Day. Let's take a look at what's going on in these markets. Joining us now for a conversation, Brian Doherty, Senior Market Advisor at Total Farm Marketing, is with us. Brian, good to talk with you again, sir. Thanks for being here. And it's nice when we have a little green on the screen to talk about, isn't it?
Yeah, it sure is. We've had some green on the screen. And so the question is, what's driving the market, right? So we've had some up here. And I think you can kind of take a step back and look and say, hey, there's been some beneficial rain in the Midwest here the last couple of weeks, but there's been a lot of areas that have missed rain too. And so that important pod filling for soybeans, that may be a little bit of a catalyst here why the bean market has clawed a good 30 plus cents higher over the last several days. Good export sales were noted today for the new crop as well. And so you got a few things there that are, what I would call supportive, and the market's responding. There's probably some short covering into the weekend as well. And I think maybe the funds are really asking themselves, how short do we want to be at a low price already, historically / seasonally, at a time of the year where you start to question whether or not there's a lot of downside potential. And sometimes we see the low come in. We look at some what we call strength charts, and it looks like, around the 1st of September for wheat. Same thing, first, second week for corn and soybeans. So kind of a combination of a lot of things. I would tell you I'm not pointing to one event, but new crop sales in soybeans were very impressive, as were corn. Soybeans 96.1 million, corn 58.8. Those are some good numbers. Now that's for the upcoming season, but it's still some good numbers that we're starting to see the market respond to lower prices and a weaker dollar.
Yeah, very true. Some good things. And I did not look to see if we closed there, but I know that corn, beans, wheat all looked like they were kind of bumping up against the 20-day moving average here on Thursday, which I know a lot of traders they like to look at that. And if we could get a couple days here above the 20 days heading into the weekend, that could be supportive, I think, as well to these grain markets. Can it, Brian?
It sure could. So the technical picture starts to look a little bit more, let's say, consolidation or supportive. December corn, as an example, I also look at the 10-day moving average. Got a 10-day moving average at a pretty solid close above that level today, with East corn at 396, up 5 1/4. And that level coming into today, just expanding my chart out just a little bit to take a look, but that was a couple cents lower. The point I want to make here is we haven't had a really good solid close above the 10-day moving average until the end of, you got to go back to the end of July. So we're at a month. And then I also want to point this out, December corn at 396. Well, December corn on August 8th had a low of 395. The point is we've gone all through August and we're not changing the price of corn on the futures market. So these moving averages are beginning to level out. Beans had a really nice positive close today at 15.5, 992.5. And the first close above the, now I look at the 21-day moving average. It pancakes the 20-day. They're really close. That's the first close more than a penny above the 21-day moving average since the end of May.
Wow.
So that is a wow. Starting to get a little bit of percolation there. And again, good export sales, weaker dollar. I'm going to say a crop that probably may have maxed in size a couple of weeks ago. Talking to farmers in areas that said, hey, I've had excellent beans. I would say they're a notch below excellent right now just because we haven't had rain in 2 or 3 weeks. That's measurable. And this is our pod filling window.
And that's a good point that we should think about as well here is that, has the market priced in a big crop, but maybe we've priced in the top, so to speak, here with some of this late season finishing. There was a little bit of heat here earlier this week that maybe potentially did some damage. So I'm wondering market psychology here as we flip through Labor Day, if maybe we start to think that, okay, maybe we priced in the top end of this yield potential. I'm not sure, but I'm getting some of that feeling out here right now, Brian.
Well, that's what I'm suggesting as well. I'm getting that feeling as well, and we try to sample a large number of producers in our conversations as a company, and so this is what we're hearing now. Are we splitting hairs? I don't know, but kind of keep this in mind too, that if you didn't get some rain this go around, I think this is the third day in a row now where just about the entire Midwest on the 6 to 10-day forecast is below normal in its precipitation expectations. So it doesn't look like there's a lot on tap, which is almost the mirror opposite of what we'd seen, let's say in the late May, June, early July window, where there's always rain on the radar. What we're seeing is rain on the radar, but a lot of it is scatter type showers or small showers, small thin bands. So if that forecast holds true, we might be in for a little stretch here where there's just not a lot of moisture to kind of put the finishing touches and punch that crop out. We'll have to see, but that's again a report, a summarized report from the field.
Yeah, very true. Well, and I know you've been talking to a lot of farmers. I talked to plenty at the Farm Progress show this week, Brian, and the mood seems to continue to be, even though we're getting a little green here on the screen, it's still kind of a mood of, okay, prices are depressed. What do I do? How do I navigate this situation? And I think it's almost maybe I don't want to say reality setting in, but I don't know how else to explain it. Going, okay, this is where we're at for right now. How do I navigate this current price environment?
It is reality setting in. So let me put this into some context that I think has merit. So I'll give you some numbers, and then I'm going to say don't quote me on them because I'm doing this from memory. But since 1980, in 32 of the last 34 years, the December corn contract high, when it traded in the month of January, was exceeded sometime during the growing season into the fall. That didn't happen this year, right? So for farmers to kind of have to accept the reality that we just had a big miss all year. There was no weather market of consequence that drove the market. We had a lot of adversity in the May planting window with all those copious rains and flooding. But it was a band, and that band is going to be challenged. A geographical band will be challenged to have those kind of yields that they maybe strive for. But on the other hand, the rest of the country seems pretty good. So it's just a reality of that. You've had a year of not enough weather events, and maybe not enough weather events to really propel the market, because on the backside of that, we just haven't had enough demand events. South America's had good crops, and you've got this continued stress with relations and wars, and it just doesn't seem like the money really wanted to find its way into row crops. You've had, some real trouble in the wheat market this year. After it peaked, it dropped so hard. So the wheat market helps to pull corn highs, but that too peaked at the end of May and has been in a steady downtrend since. So it just hasn't been an easy year. And to your point, the mood is somber. Okay, so we're higher today. We need to get a lot higher for a lot of farmers to really kind of feel like they're rewarded for their efforts. And it's unfortunate it doesn't look like that's on the near-term horizon. I wouldn't rule anything out a year from now. You never know. You've got big weather developments that could happen in the southern hemisphere and the northern hemisphere. You've got all this global climate change talk and disruptive weather. Things might change, but right now the reality is we've got a really good crop coming as a whole. Little too much carry out from last year, and consequently supplies are just adequate. The end users not likely to chase the market too hard, other than if they just like the value and say, I want to buy the value and not have any uncertainty.
Yeah, and maybe as we got first notice day this week too. Maybe if we get some of that September to Dece carry and quartered weeds, and maybe get some of that flushed out of here, maybe that'll help as well. But particularly quartered wheat, Brian, I'm not sure, but it's possible here as we get through this window here ahead of the weekend, right?
Oh, it sure is possible, but those are still things that will, can help bump the market, give it some directional move, but these aren't game changers. But all bull markets start somewhere, all bear markets start somewhere. A lot of times bull markets start when they kind of look, most bearish. So
Hmm.
when I say bull markets, first you got to get a recovery, which is typical, but if you're going to turn it into something, then you need another element or two, usually some sort of weather related problem, or just some kind of phenomenal demand intake. And unfortunately, on the demand side, I don't see that kind of buying interest changing significantly unless there's a bit of a weather scare to really make the end user think this could get painful. I need to cover. I need to cover today. I don't think we're in that environment. What I do think is, though, we might be in an environment where I look at wheat posting a bullish key reversal here earlier in the week, that if we move into this pattern of El Nino to La Nina, that might have some disruptive forces. In particular, we want to kind of watch where the drought monitor maps kind of show the western, southwestern part of the United States. If that permeates, that's going to have some impact.
Brian Doherty with Total Farm Marketing is our guest analyst here today as we recap Thursday's market action. Brian, livestock trade, cattle were pretty quiet to mixed on the day Thursday. Haven't seen a whole lot of cash trade this week ahead of the holiday weekend. A lot of that probably already priced in this market a few weeks ago, that retail domestic demand. And so it just feels like cattle are kind of shopping here heading to the holiday weekend at this point.
It feels like that because they are.
Yeah.
That being said, you look at like August up $1.12 today, and here not just too long ago, on the 26th of July, was at 189.32. So again, that 190 area. Got to think that there's some hopefully good disappearance of meat into the weekend, and then with school starting, that type of thing, maybe there's this sort of bump. Ultimately, the market seems pretty tepid though to move those back months higher. And you and I've talked about this before. I still think that goes back to just uncertainty with just the economic conditions. One, and then two. This election has a lot of ramifications, however it falls, and I think that there's just kind of this kind of tepid mindset right now that the consumer, my view is it's a tepid mindset that the consumer is guarded on how they're spending their money, credit card debt, those type of things start to creep up. You got fall to look forward to and heating bills and all of that. So I think the customers are being more selective on the demand side, and that's what's going to keep us in check. I still contend there's no expectation on the supply side for this year, for the next 12 months or longer, where all of a sudden we're going to see bigger inventory numbers. I just don't see that.
There's a lot of uncertainty ahead of us, and you think about the election cycle in particular and the influence we have from that. I mean, you start hearing about food price control talk and things like that, and there's a lot of uneasiness surrounding policy related to agriculture, I would say here. And I think a lot of that, to your point, is really kind of permeating its way into this market. There's just a lot of unknowns, whether it be ag commodities, livestock, or the outside, the financial markets here as well. And then, the talk about cutting interest rates in September, things like that. There's a lot of uncertainty out there right now, Brian, it feels like.
Well, and there always is, but I think it looms a little larger this year because it is an election cycle and it's contentious and I guess pretty close right now. And then you've got just kind of the world is on edge and disruptive. You've got this, continuation of the war, almost a year old on October 7th with Israel and Hamas. And then you've got Ukraine-Russia war. That's, heated up. When is the retaliation? If it comes from Iran, I can't help but think they will. And then you just, see this interest rate environment where they should be headed lower. Has it been too long? Are we going to still slip into recession? A lot of things that just aren't easy answers right now. How does it relate to our customers? We just talked about cattle. When cattle rally, defend those prices. If you're a feed buyer, feed's pretty cheap right now. Think about that. think about if there's weather disruptions. If you're a producer of corn, soybeans, we got to still look for base hits, try and sell rallies, get some sold, look at ways to retain long-term ownership if you want to stand in front of it with fixed risk. But there's things that can be done. They need to be discussed.
Very, very true. Brian, anything else? Any final thoughts? Anything you want to reiterate to folks here before we wrap up the show today?
Well, it's a big 3-day weekend, a travel weekend. Record travel is expected, so the roads will be full. Just be safe, be patient, plan ahead. So that'd be one thing. Obviously, my wish to everybody to have a great holiday, whether they're traveling or just working on the farm, getting ready for harvest or milking cows or whatever you're doing, but take a few minutes and enjoy it. You got all year to keep working at it, so take a few minutes. And then the second thing would be just stay very vigilant to these markets. Particularly, we didn't touch on milk, but really good rally there here the last few months. Good demand under the market right now, but look to take advantage of those prices. Same thing with live cattle. Feeder cattle, continue to look to buy the dips in that market. Corn, beans, wheat. If we get some rallies, dribble a little bit out. We're not likely to see a major change in the trends at this point.
Brian, if folks want to reach out to you for a conversation at Total Farm Marketing, I know a few different ways to get a hold of you. How could folks contact you, Brian?
Well, a couple of ways that probably work best. One would be an ask for them or you to call. You, the listener, call 800-334-9779. If you want to talk to me, ask for Brian with a Y, which leads me into my next way to get a hold of me. If you want to shoot me an email, very simple, Brian, B-R-Y-A-N, Brian at totalfarmmarketing.com. Happy to field any questions that way as well, or listen to your situation. So yeah, good ways to get a hold of us. We're happy to help. That's our passion. So make sure you connect.
And check them out as well online, totalfarmmarketing.com. Brian Doherty, thanks for the time, sir. Have a great holiday weekend. We'll talk to you next week.
Absolutely. Thank you, Jesse. You as well. Drive safe.